Good morning, ladies and gentlemen, and welcome to the Longboat Energy PLC full-year results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just please simply type in your question and press send. The company may not be in a position to answer every question it receives during today's meeting. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet company dashboard. Before we begin, we would like to submit the following poll, and if you would give that your kind attention, I'm sure the company would be most grateful. And I'd now like to hand over to CEO Helge Hammer. Good morning, sir.
Thank you, Mark, and good morning, everyone. Starting off with a bright, sunny picture of Stavanger Harbour here, and what we will do is we'll take you through a presentation, and then we can follow with the Q&A. We start off with a little reminder of the strategy. So Longboat's strategy is to create a full-cycle E&P company focused on the North Sea. We've started off with an exploration deal, but the intention is not to remain an exploration company. We are going to move into a full-cycle E&P. Also some points about being in Norway. We believe we are in the right country at the right time. And up in the corner there you see Norwegian exploration results, which remain very high. Last year there were 40 wells drilled, 20 discoveries were made, significant volumes were added. So we are in a business which is creating very significant value, and it's a good way to start an E&P company. And it's a good geography to be in. Second point on Norway is the point below, the graph below. That's the ESG side of things. ESG remains very important, and having low carbon emissions is important. And you see on that graph that Norway has the ability to deliver gas to Europe and gas to the UK at very low carbon emissions. Lower than UK can itself, actually. So creating and building a new E&P company in Norway is also an opportunity to become an excellent ESG performer. And with recent events, energy security is another really important aspect of E&P business. And again, being in Norway is the right place to be, with the ability and having the infrastructure and ability to deliver oil and gas to Europe. So the last aspect is actually tax, and there's a tax change underway in Norway, tax change that we believe is going to be very good for us, and we'll come back to that shortly. Moving on to what we have done so far. So we did our first deals less than a year ago in June of last year. We announced 3 farm-in deals, farmed into 7 wells. We did that at a time when exploration was available because of the COVID situation, and a lot of companies looking to save their exploration budgets. So a lot of wells were available, and we handpicked, used our very skilled G&G team and handpicked them and built a very bespoke drilling program. Completed the deals and started a drilling program. Drilling program has so far been delivered very much on time and budget. So drilling has been very efficient, and we've drilled 4 wells so far out of 7. Of those 4 wells, we made 3 technical discoveries. Three of them found oil and gas. Mugnetin, unfortunately, was too small, so been written off as an uneconomic discovery. We made 2 discoveries that are commercial. Rødhette, a bit on a small side. We come back to that. And then Egyptian Vulture is one of the most significant discoveries in Norway last year, but needs appraisal, and we're coming back to that shortly. We have started this year's drilling program, and we have 3 wells coming. First one is already drilling, that's Kveikje, which we'll come back to. And then we have two very large gas prospects that will be drilled later this spring and in the summer. I'll hand over to John now to take us through the financials.
Thank you, Helge. So starting with the balance sheet, we ended the year with £26.3 million of cash, and that was after doing our initial fundraise, spending approximately 30 million on exploration and appraisal, both drilling and carries, i.e. the consideration to get into these licenses, and that was after a tax refund under the temporary regime for 2020 and 2021 of £18.6 million. At the year end, we had a receivable of £8.1 million. There were no drawings under the EFF facility during 2021 because we were in the temporary tax regime, so we didn't need to use that. It was paid by way of these negative tax instalments, which are paid on a regular basis. Post the period, we drew 15 million under the EFF just to demonstrate that it worked. We had clarification from the Norwegian government that there would be or assurances that the pledge would be in place. So we drew on that to make sure it all worked and worked with the banks. It does. So that's great. And we will be drawing on that this year. And the government will then repay us the amounts that were drawn under that effectively at the end of next year. So it's just a working capital bridge. In terms of the operating loss, the loss of the period was £4.7 million. And that was after, as Helge says, we wrote off Mugnetin because it's sub-commercial and there was no further prospectivity on the license, in our opinion. And there was a tax credit of a non-cash item of 6.9, leading to the loss of the period of 4.7. As I mentioned, the tax system in Norway has been changing. The tax system has been incredibly supportive. So it changed in 2021 and 2020 for the better as a part of COVID to support the industry. That was good. That meant there were no sort of distress in the industry, really, no balance sheet distress, because people just claimed their 78% of their losses back. It wasn't really designed for the oil companies. It was designed for the whole offshore service industry primarily, but we all benefited from that. There are more changes afoot now. We're waiting for the detail on that. We're expecting that detail in Q2. We've been involved in consultation, the whole industry has, and we have an idea of what that will look like. We think it's pretty positive in terms of what it can do to cash flows for small companies, and Nick will take us through the detail on that. So over to you, please, Nick.
Thank you, John, and apologies up front. I'm feeling a little bit under the weather, so hopefully you'll be able to hear me. As John was saying, the Norwegian tax regime has been very stable for a very long time, and it continues to be so. But towards the end of last year, the Norwegian government proposed some changes to the tax regime, not to the headline rate, which will stay the same at a marginal 78%, but actually to the way that the whole regime is structured. And for us, this was a deliberate move by the Norwegian government to nudge companies in a direction of trying to maximize the existing resource on the Norwegian continental shelf by developing it through existing infrastructure, and really encouraging companies not only to explore, but also to develop those resources. That's important for a couple of reasons. One, it lowers overall costs. Unit operating costs come down the more barrels and molecules that go through existing infrastructure. You're utilizing all of the existing resource during the energy transition. And certainly you're doing that at the most ESG-friendly way. Because the more molecules and the more barrels that go over a set of infrastructure that has a more or less fixed CO2 output, the lower CO2 output per barrel or per BOE we see. So the main change that has gone on here is there's been a rejig between what's called the special tax and the corporate tax. But most importantly, what is happening now is that instead of having a narrow bucket of refunds associated with your exploration costs, so all the costs that go into just doing an exploration well, the Norwegian government is moving to a situation where they are going to refund all of your costs, all of your losses incurred in year one at the end of year two to the tune of 72%. So the way this works is that currently, if you spend 100 on exploration, in the year following that, you get 78 back from the government in the form of a cash deposit. The new situation will be that if you spend 100 on anything, so that includes capex for development or your overall running costs, you will receive 72 back in the year after that happens. We believe there's going to be a relatively smooth transition from the current regime into that regime. And I think that the real benefit for someone like a Longboat is, which I would describe as a pre-revenue company, is that will significantly reduce the working capital requirement for developments. On the chart, in the chart on the right, we've tried to sort of demonstrate this with a kind of a fictitious development. And what you can see there is using the existing terms, you would spend, and then when the field starts producing, you start to recoup your historic expenditure. But under the proposed terms, you spend and then you get a rebate from the government. You spend, you get a rebate from the government. So actually that trough is much, much shallower, which means financing developments becomes much more realistic for a business like us. And in addition, we believe that the changes will allow us to continue to use the sort of technology that we use with our exploration finance facility, but sort of repurpose that in order to help finance developments going forward, and utilize the rebate that comes back to you as a sort of pledging that in order to raise further debt. So that reduces even further your equity requirement. So what does this mean for us overall? Well, overall, it means it gives us an opportunity to take our discoveries all the way through to development if we were to choose to do that. And it also allows us to potentially look at interesting developments as a way of growing the business through actually investing and getting into new developments because of this ability to finance that was not available to us previously. We believe that these changes will be ratified during the first half of 22 by the Norwegian government, and we see it as a real positive and a lot more opportunity for a business like us. Now, perhaps hand back to you, Helge, so you can go through some of the discoveries you made so far.
Thanks, Nick. Yes, let's look at the assets. The first on Egyptian Vulture. This was the significant discovery we announced back in December. This well came in on prognosis. Found what had been mapped as a very large seismic anomaly. We did actually prove that to be a 13-meter net sand hydrocarbon field, and it was filled with a very light volatile oil with a high gas content. So that's a beautiful discovery. You see the map there. It's a very large area, covers something like 80 square kilometers, all having this same seismic amplitude visible on a map. The thing with it being so laterally extensive means that it does need to have some appraisal. It needs to be mapped out properly before there is confidence enough to take it forward as a development project. You look on a map there, this is sitting in Norwegian Sea outside of Trondheim, where you have some very large oil and gas fields. The big facilities in this area is Åsgard, Kristin and Hadrian, big floating facilities, and all operated by Equinor. Equinor used to be called Statoil, a very big player in Norway, is also the operator of Egyptian Vulture, which is great news because they will have the ability to take this forward and develop it as a subsea satellite. It has a very large in-place volume. The next step is to decide on an appraisal well, and you see the schedule for that at the bottom there, as proposed by Equinor. We are not in control of this. You know, when you have Equinor as an operator, is great for business because they do a really proper job. But being a small company, we don't really control the timing. The timing, as indicated by them, is that we will make a decision on an appraisal well before the summer, so that in the summer we can acquire a site survey. Site survey is the first step towards the well, and then next year we can come in and drill an appraisal well to de-risk this potential development project. So very excited about this, and looking forward to the next step. The second discovery that we did, which is commercial, is Rødhette, which is sitting in the Hammerfest Basin outside of Hammerfest in the Barents Sea. This one is operated by Vår Energi. Vår Energi is an Eni-owned company which listed on the Oslo Stock Exchange a month and a half ago, and that company in their IPO materials described Rødhette as a potential development in this area. They have a field called Goliath, and they have another field called Alke that they are planning away on the development, and so there will be a gathering system for oil and gas, and then a solution for the gas export, which could be around LNG or hydrogen or ammonia. There's significant amount of potential, both discoveries like Tornerose and Rødhette, but also exploration still very active in this area. So that one unfortunately didn't come in as big as we'd hoped for, but big enough to form part of this future project. Then we'll move on to the this year's program, which has just started, and the Kveikje well, been drilling for a bit over a week. It's a quick well, again operated by Equinor using the Deep Sea Stavanger, extremely efficient drilling rig. The main target here is Paleocene injectite, and injectite is a reworked sand, so cleaned up sand, which makes these really high quality reservoir sands. And examples are, for example, Kveikje field in the UK, and there are also several in Norway, like Frosk. This one has high chance of success. That's because it's very visible on seismic. The expected size is 36 million, with an upside up to 79 million. And there are also secondary targets, both deeper and one shallower. And we're getting close to the target, so we expect to announce the results here very soon. If this one comes in, it could be developed together with a string of discoveries that have been made during the last couple of years. You see all the blue boxes on the map there are all Equinor operated, and combined they make up a few 100 million barrels, and which means there will be significant economy of scale. And if Kveikje could become part of that, that would be fantastic. Then once we've finished on Kveikje, the same rig, Deep Sea Bergen, will move just next door, where we have the Cambozola license. Cambozola is a huge gas prospect. The last two wells are very large gas prospects. You see the map there is from Wood Mac. Wood Mac is well-known oil and gas consultancy firm, and they highlight here that Cambozola and Copernicus are wells to watch. So on the wells to watch list for Norway 2022, and we are in both of them. The Cambozola will take some time to drill because it's an HPHT well. So that will drill during April and May. And then Copernicus is expected to spud in July, August time. So that's to look forward to. And then we continue to chase opportunities in the M&A market, and I'll hand back to Nick to give us an update.
Thank you, Helge. So just a sort of a brief update on what we're seeing in the market. I think probably in our last update to the market, we were talking about seeing signs of increased activity in the second half of 21 and going into 22. We saw there going to be an increased level of activity. And that was very much beginning to play out with increased sort of processes being run and increased conversations going on between companies. Unfortunately, it would seem that the recent volatility that we've seen in the commodity price markets following the events in Russia and Ukraine is likely to put a dampener on the ability to transact. The delta between buyer and seller expectations when you have volatility like this kind of widens considerably, and it becomes very challenging to actually transact. In fact, we have recently heard of a number of processes being canceled because of failure to sort of agree between buyers and sellers. Prior to that point, what we were seeing was the continued sort of dominance of private companies transacting. So these are mainly private equity-backed businesses, many of them, very large, looking to sort of bulk up and create what I would describe almost as European super independence, as we see in North America. And we've also seen a little bit of that in the public space as well, with the merger of Aker BP and Lundin at the back end of last year, one of the largest corporate transactions globally in the oil and gas space last year. We continue to believe that mid-market deals, sort of things that are under $300 million is kind of the best hunting ground for us. These deals tend to be kind of too small for the larger players and too big for the smaller players. That said, we've definitely seen an increase in competition recently for those, as sort of companies are looking to expand and looking for sort of opportunities, especially in Norway, as Helge was mentioning. The attractiveness of Norway, I think people have woken up to. The good news is that Longboat is one of only about 30 companies active in Norway. The barriers for entry are actually quite high in Norway. Versus somewhere like the UK, where you have something more like 130 active companies owning licenses. And the good news is that we've got an excellent in-house team following the transactions last year, which allow us to do sort of quick and consistent evaluations of opportunities. And that allows us to kind of leave no stones unturned. Like that said, we maintain a very disciplined approach to valuation and our evaluation of opportunities. We ourselves are big holders in Longboat, and we really are looking for value accretive deals, not just dealing for dealing's sake. And so we'll continue to be very sharp on how we evaluate potential transactions. We've talked a lot in the past about using our discoveries as a sort of swap currency, and we still continue to think that remains a possibility, even in these sort of volatile markets. But we will always look to ensure that we have a sort of maximum value for these discoveries ahead of any monetization. So if that means taking through to an appraisal phase, such as an Egyptian Vulture, we'll do that. It's all about where we see the best value. And then, just to reiterate that the tax change, I think, has helped us considerably. This allows us to look at a wider range of transactions and also in a negotiating stance in terms of any sort of swaps. It allows us to potentially bring forward our own discoveries through to development, and we're working quite closely with a number of banks to see if we can work on putting in place a facility that will make the most of that. So our plan remains to build Longboat into a full cycle E&P company, but very much on a sort of value-driven basis. I think back to you, Helge, to close us up.
Thanks, Nick. Yes, just to summarize, the strategy is unchanged. We are on track to build a full cycle E&P business in the North Sea. We are replicating what Faroe Petroleum did. Faroe Petroleum was sold, you remember, in 2019, some of you. The first step has been exploration in Norway. We are very confident that that has been the right step and is the right step to take. We've drilled 4 wells so far. We drilled two discoveries. One has significant potential, upside potential, and we have 3 wells coming, and remain very confident that will deliver value. And we continue to chase opportunity in the M&A market, and very confident that we'll also deliver on that. So thanks everyone, and I think we're over to a Q&A session.
That's great. Helge, Jonathan, Nick, thank you very much indeed for your time and for updating investors this morning. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab on the right-hand corner of your screen. Just please simply type in your question and press send. But just while the company take a few moments to review questions submitted already, I'd like to remind you that the recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard. Helge, Jonathan, Nick, as you know, we received a number of pre-submitted questions, and if I may, I'd like to start off the Q&A with those. The first one, if I can condense it because it was kind of long-winded, is can you offer shareholders any comfort that your strategy to become a full cycle E&P company can be still successful?
Yes, I think we have covered that in the presentation. I think we're very happy with what we've done so far. We've drilled wells, we've added intrinsic value with the drill bit, even if that hasn't been reflected in the share price yet. We're very confident that that will come through. Egyptian Vulture and Rødhette are 2 good discoveries. We have 3 more wells that are really the right wells to be in, and also confident that we can do deals. We remain disciplined. We remain focused on quality, and we are in a very unique spot, with not that many companies in Norway that can do what we can and have the competence and abilities that we have. So we remain very confident.
That's great. Thank you, Helge. If I may turn to the next question that we received, Longboat Energy has employed a team of senior experts, which is necessary for the Norwegian licensing, but very expensive for shareholders. The question goes into a little bit more detail, but in short, are shareholders getting value?
Yes, I think it is an important part of the Norwegian industry to have a team and to have the qualifications. But it's also a team that is delivering significant value. We have the ability to screen both M&A opportunities and any exploration opportunities that could come through license rounds, what have you. So I'm very happy with the team. We have some real quality and really skilled and competent people. It's not a very large team, and also remember the Norwegian tax system where you only pay say the after-tax amount of that G&A costs.
But also it's a requirement, Helge. You have a C2 duty in Norway. You won't operate without one. You get audited by the Petroleum Safety Authority. You have to demonstrate you have the skill set. It's not an option. It's never been an option. And we have a very high quality team.
All right, thank you very much indeed. Turning to the next question, again, it was a paragraph or 2, but in short, Longboat have consistently said throughout previous reports that the environment for M&A deals is improving, and then potentially subsequently gives reasons why it's not been possible. Can you give a little bit more clarity? I think they go on to say that other companies have done done so and propelled the share price?
Yeah, I mean, yeah, that's correct. I think there's nothing better. I think Nick explained it. There's nothing better than kind of a stable market. So prices yo-yoing up and down is not good for doing transactions. But we remain kind of focused. We also, with Faro, used discoveries as trading chips. So that was also an important part of that. It always, in hindsight, would have been good to do some acquisitions before prices go sky high. Of course, I mean that's pretty obvious. We haven't done that, but I don't know, Nick, if you want to.
Yeah, look, rest assured, we're very, very active. We are constantly screening things. We are constantly in dialogue with people, and we've been very sort of active in sort of pursuing opportunities. But I just wanted to reiterate that it's only the sort of the right opportunities, and we're not willing to pay anything at any price just to buy, production because people think we need production. It's got to demonstrate a return to shareholders. It can't be value destructive. And one thing we've noticed is that if you look outside the sort of jumps in commodity prices of late, not every single transaction is met with an increasing share price. In fact, there've been some that have been announced that have not really sort of made any impact on some of these businesses. So it's really a value over growth thing for us. And I remain confident that despite all the things going on, that M&A will play an important part of helping grow the Longboat story.
That's great. Thank you very much indeed, Nick. If I may turn to the next question, when is the data analysis on the Egyptian Vulture going to be ready?
I think we did answer that during the presentation. The answer is in the first half of this year, so that we can shoot the site survey in the summer. The work that is ongoing is a very technical. We work very closely with Equinor on seismic updates, seismic reportation. So all of that is time consuming, but it's progressing well, and we are not entirely, as I said also in the presentation, not entirely in control of the schedule ourselves. It's one of the aspects of working with big oil companies.
Thank you. And again, obviously these questions were somewhat pre-submitted, but if there's any further clarity you could give around the next one, how is the drilling going to date at the Kveikje?
Yeah, no, thanks for that. It's the same. I think we also replied to that question. It's going very well operationally. The rig has it's an efficient rig, and the well spudded only a bit over a week ago. And as we said in our update, we expect to announce the results very soon. So I think you can read from that it's going pretty well.
That's great. And then the final pre-submitted question, if I may, out of all the 7 drilling programs, what one is the most exciting in payback terms?
Yeah, I think for us it's a balanced program always, and that was important. It has a good risk-reward spread, but I think that in terms of success coming in, Cambosola, we have 25% of Cambosola, and it's a very large prospect with also very large follow-up potential within the license that we all sit on. So Cambosola will be a real company maker if it comes in good.
Well, that's great. Well, thank you very much indeed, and that takes care of those pre-submitted questions. Helge, Jonathan, Nick, you'll see investors have submitted a number of questions throughout today's live presentation. I wondered if I may just ask you to read out the questions and give a response, of course, where it's appropriate to do so, and then I'll pick up from you at the end.
Okay, thanks, Mark. Yeah, we can go through. I can pass them on, and some of them. The first one is, what's your view on the potential for future dividend payments? I think that's one for you, John, to
Yeah, I mean, at the moment, we would need production to pay dividends. We got close to paying dividends in Faroe. We were just reaching that stage where we're generating free cash flow to pay dividends, and that was on the cards. We're way off it as an explorer at the moment. I'll take the next one as well.
Yes.
Mark, if you want to read it out.
Yeah, and any potential impact on the company from the situation in Ukraine?
Yeah, I think we don't have. I mean, I think there's a lot of interesting things going on there, and it's a real tragic situation that I think caught the world by surprise, really. We don't have any contracts with any sanctioned Russian companies. We don't have any contracts with Russian companies, and I think the sort of the latter comment there is the important one, because a lot of companies are being put under pressure to cut their contracts with Russian companies. We've seen IAG cut its offtake with Gazprom. I think that's going to end up in, or Gazprom Trading and Marketing. Alexei Miller is sanctioned, obviously, but Gazprom Trading and Marketing is not. That will no doubt result in some sort of potential issue. I think there's a lot of issues around this, but for us, fortunately, we don't have contracts with any Russian companies. I think we're seeing a lot of oil and gas price volatility. I think we're seeing financial exchange volatility. I think we've seen the pound strength, the dollar strengthen against the pound a little bit. Yeah, we changed a lot of our pounds into dollars at better rates. So we have a few more to do, but we'll make our average targets that we set out when we raised the money to do this, to farm into these 7 wells. So our FX targets, so that's good. And I think we've already talked about what the oil price volatility is doing to the M&A market. You're getting a big delta, or people just sitting there going, actually, I'll take the cash. So I think we're less affected than most. We don't have Russian assets.
Thanks, John. Next question. Why do you think the market isn't reflecting the excellent assets and success to date? Well, first of all, I think we are equally frustrated that many of you our shareholders are, and we are shareholders ourselves. So it's frustrating when you make discoveries not to see it coming right through in the share price. But from experience, and I think we saw this many times with Faroe as well, sometimes it does take a little bit of work, and it does sometimes take an appraisal well before the value comes through, and sometimes also a deal, and we did swap deals with Faroe that was excellent, and I think that those were real value demonstration. So we will just keep doing drill good wells and do good deals, focus on quality, and focus on growing the business, and then we are strong believers that the value will come through. The next question is, with the Ukraine situation, its impact on commodity prices, how has this changed either your approach or the approach of others in the M&A process? Maybe
I think we've done that, Helge.
I think we've done this one, but I think just quickly about, say, production versus development, Nix, and the tax. I think that's kind of a point we've made, but we could maybe do that again.
Yeah, I mean, so clearly that volatility becomes a real issue when people are trying to agree things. Like I said, we've seen transactions getting pulled recently because of the inability of buyers sellers to agree things. But that tends to be at the front end of the curve. So if you look at what oil is selling at in 23, 24, 25, sort of out further in time, and actually it's not far off where people thought it was or would be. The whole curve has moved up a bit, but the most dramatic moves have been at the front end. So ironically, agreeing things on assets that aren't currently producing may actually be easier. Or things that are going to be developed over the next couple of years and be producing in a couple of years, you might actually be able to see some better value. So we're sort of keeping an eye on everything at the moment to make sure that we're not missing anything. So we're really trying to leave no stone unturned. And like we said, we've been working with the banks to try and think through and look to structure a debt facility that could both facilitate, production or development or a combination of the two, which leaves us, flexible. And in my experience, being flexible in terms of where you see the best value at any one point is usually the best way to get the share price up in the longer term.
Thanks, Nick. So we have one last question. How many wells do you think would be required to delineate Egyptian Vulture? And is there any concern that the reservoir quality is moderate to poor? Those are good questions. I think what we are likely to do with is typically with an appraisal well on a field like Egyptian Vulture, it's about demonstrating an economic case. I'd say the smallest economic case. So it would typically be a well that is there enough to prove that you have an economic case, and proving the reservoir producibility is an important part of that. You see the recovery factor used so far is quite low. So and with a new well demonstrating that reservoir producibility could have a very big impact on the recovery factor. So I think that's kind of the main delineation, and then you could possibly see a larger step out well to demonstrate the upside. So I think the answer then is either one or two, clearly. Thanks.
That's great. Helge, Jonathan, Nick, I think you've taken every question from investors this morning. So thank you to everybody who submitted questions this morning. And of course, if any further questions do come through, guys, we'll make those available to you post this meeting. I know investor feedback is important to you guys, and I'll shortly redirect investors to give you their thoughts and expectations. But before doing so, I wondered, Helge, if I could ask you for a few closing comments.
No, thank you for attending, and thank you for good questions. And we are very excited and feel very confident at this point. So looking forward to kind of the rest of the year. Thanks a lot.
That's great. Helge, Nick, Jonathan, thank you very much indeed for updating investors this morning. Can I please ask investors not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the company can better understand your views and expectations. This may take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Longboat Energy, we'd like to thank you for attending today's meeting. That now concludes today's session, and good morning to you all.